And local trade expected to continue with its upbeat trade today. South African markets closed in the green yesterday, led by gains in retail and the financial sector stocks. Now, the rand also strengthening against the US dollar after inflation rose for the first time in 4 months in February. Well, Chief Investment Officer at Makwe Fund Managers is Makwe Masilela, joining us now to give us a quick update of how the JSE is shaping up in early trade. Mr. Masilela, thank you very much for your time. That quick overview at the local exchange and the rand faring better this morning, is it, after ending the previous session in the green?
Definitely, and good morning to you. Yes, the JSE managed to open up, continue where we left off yesterday, and we know it was the story about the Fed, and yes, the guy, he had to walk a tightrope between inflation and financial stability, and he did manage to nod to banks' troubles, but he pressed ahead and increased interest rates as expected. And also now the question has been, the guy said, listen, markets were expecting interest rates to go down sometime this year. I beg to differ. And I think also what didn't sit well with the market at some point is those comments coming out of the U.S. Treasury Secretary telling us that not yet considering a blanket insurance when it comes to deposit. But the JSE this morning has been lifted up by industrials, the likes of Proxas and Naspers.
Let's quickly get into company news. Afrimet Construction Index showing a marginal dip in the fourth quarter of 2022. Talk us through those numbers.
Guess it was expected, especially after getting a GDP number that was down 1.3% in the fourth quarter. And yes, we know that construction is not reflected 100% on our GDP numbers. Hence, we've seen that when you look into the index itself, we saw a fall of almost 2.2%. And for obvious reasons, high interest rates. The minute interest rates start going up, it becomes difficult for people to afford whatever loans they need to afford. It becomes difficult for people to plan ahead because they don't know what things will be shaping up like. As come next week, maybe we might be getting another interest rate hike or so. And also the issue about our municipalities. The guys get to be given the monies to do the road stuff like that, but unfortunately they decide not to do that. That itself continues to discourage people to invest in those kind of municipalities. So those were the two main reasons that we've seen a dip when it comes to the index.
Let's talk about Remgro, which has posted its results for the 6 months, which ended on the 31st of December 2022. And guess what? A declaration of a cash dividend. Talk us through their performance.
You know, definitely we have to smile. Yes, we're still worried about the discount between the intrinsic value and the share price. But this is an investment holding company. You invested in the likes of Mediclinic, First Rent, we name it, Outsurance, RCL Food, and they've seen their revenue growing up by almost 60%. And that's despite the international and domestic economic conditions. But the guys maintained to grow the earnings. And as well, they're continuing to try to unbundle with all these corporate actions. We know the latest one is the Distel Henneken one, and we hope that people will be rewarded nicely from that one as well. And now to see their dividend going up by 60%, I guess it was expected after getting some funds from the likes of Discovery and Momentum. And also the guys, they think that when going forward, then they have to make sure that they have to try to see that that discount between their share price and intrinsic value gets at least to be closed. But yeah, generally the company continued to do well, and I guess we're all smiling and happy.
Let's conclude the conversation with Steinhoff. The shareholders there rejecting the group's debt restructuring deal. Is this the end of the road for this group? And I say that with a very interesting headline on the Business Day newspaper this morning. And it's leading with a quote, that headline. It says, and I quote now, "Give them hell," I close quote.
Definitely they will get hell. Shareholders, they voted against the whole issue. Remember, this was announced sometime in December, but they had to get shareholders to vote that, listen, you, the lenders, will hold 80% of the company, and equity holders will have an unlisted entity, and they'll only hold 20%, and not even guaranteeing the value of that 20%. So the issue is, We know Steinhoff, they've been having problems. They've managed to debate and settle some of their issues, but they failed in this instance to settle with the hedge funds. But equity shareholders said no, and that being the case, we might have to get to a point where come end of June this year, when most of the debt is due, that they might have a for sale. If not, then the hedge funds might slowly start selling whatever that needs to be sold. And the deal was not fair, because they were saying, listen, we give you 80%, provided we give you an extension for 3 years when it comes to your debt. But there was no discount at all. So I think the equity shareholders said, no, we might as well all lose if that's the case.
Makwe Masilela, Chief Investment Officer at Makwe Fund Managers, thank you very much for that markets update.